Annabelle Bishop from Investec was right. Samke from TNC Capital, Wealth, was wrong. And Lance Williams from iCapital was wrong. Ouch. Okay, so Annabelle, you got it right. Listening to the governor, though, I have been actually worried. So he has imposed a rate hike on an economy that's trying to come out of a recession against a backdrop of lower prices. I'll use the phrase that have plunged. I can't believe it. Did you believe his reasons for what he did?
So I think,
was he convincing enough for you?
Look, I think, he talked very clearly about the risks that South Africa faces going forwards. And inflation targeting in South Africa is a forward-looking mechanism. It's not a current mechanism. So he was talking very substantially about the interest rate risks we face from the global economy, higher interest rates in the United States, and the substantial risk of portfolio outflows, and then that would damage us in South Africa because obviously we attract that investment into our country from a hard currency perspective. I do think, though, that maybe we shouldn't look at this 25 basis point hike as such a huge move, given that in the past we've had interest rate increases of 1%, 2%, even above 2.5%.
While we were adjusting to inflation targeting.
So I just think that this is a tiny little increase compared to that history. 25 basis point hike is the smallest you really get. If you look at the United States, even, they don't hike by more than 25 basis points. It's going to have a minimal impact on the economy. It's not going to have a catastrophic impact on the economy. In fact, what needs to turn this economy around is massive structural changes, not trying to gently nudge the consumer to slightly spend a little bit more by a 25 basis point move or not.
I think she wants to come in and say the consumer is not going to be coming into anything at all. In fact, the consumer is going to go into their shell.
But I think, just to finish my sentence, perhaps, so the point really is that, if we'd had a 1% hike in interest rates, that would have been quite a severe situation.
Right.
But a small 25 basis point, yes, it has an impact on consumer spending from people who are indebted, and indirectly in terms of economic growth. It can have a fractional impact if you were to have, a cumulative effect of a number of these small hikes. But what really needs to change in South Africa is a strong turnaround in investment and growth and employment, and that's not going to be changed by a tiny little interest rate move. Instead, what would actually spur that turnaround in sentiment and employment and strength would actually be the belief that we've got a strong central bank that does actually adjust policy when it needs to do, which he has done now. He's highly credible, and that will be supportive for credit rating agencies. But that said, it's not great for the consumer, struggling already with higher price we've had this year. But then, with a R1.61 per litre cut in the petrol price coming towards the end of this year, that will help to alleviate some of the pain. But then again, it's a very volatile situation. What we really need to support the consumer in South Africa is strong economic growth, and that is aided by strong investment in the economy, which is aided by a stable and low inflation environment.
Talking about the future. We're talking about now, Samke.
And I think that's the mistake that we make as consumers, and as myself working directly with consumers, is that we look for decisions and how they'll impact us now. And it's Annabelle is very scientific. The Reserve Bank governor is very scientific, and looking at the scientific calculations, this was the right decision. However, looking at the cumulative effect of not only the interest rate hike on the price of debt, we know that South Africa's consumers are over-indebted. 75% of consumers don't have money left over at the end of the day to save. Looking at the cumulative effect of electricity prices, fuel, VAT, inflation, overall, that basket does become quite heavy for the consumer to bear. And you will find that people who are already increasingly defaulting, because there's a higher instance in Q2 of defaults on credit, you may find that this increase will push us even further into that territory.
So as we head into that Christmas period, you can see a dampening of consumer confidence, dampening in spending.
Definitely vis-a-vis year-on-year spend. Of course, quarter-on-quarter, the Christmas period is you do see bigger spend, but definitely year-on-year. You do. I mean, from Q4.
And this is the day before Black Friday, by the way.
Friday will be black for other reasons for me, I'm telling you.
Apparently, it's actually going to be a whole month of sales. Black November now. It's not going to be Black Friday anymore.
Ooh, new term. Lance, come in. Whose decision was this for?
Look, this was for the Reserve Bank. They very credible. I think it's actually a good decision for the country. It shows that we have a truly independent Reserve Bank. I think there was a lot of pressure not to hike, but they look independently, and they're saying, given everything, and then in the inflation context, we believe a hike is necessary. And it's a little bit counterintuitive in South Africa because I think the rate hike itself will alleviate some pressure on the consumer because and already has, we've seen it in the rand strengthening, which will have a direct impact on imported prices, the petrol price being the most significant of those. So there are secondary effects which counter the interest rate increase itself, being the rand strength. We do import a lot of things, unfortunately. There's something structurally that we need to get right in South Africa. So the overall effect of the hike is actually to a large extent neutralized by that. And I think in the context of their decision, the governor is a hawk, and I think that was shown in the decision in the absence of the previous member who retired, who was known to be a dove. But as Annabelle says, it's not a major hike. And in the grand scheme of things, it's most probably overall good for South Africa.
Yeah. Lance, I asked you a loaded question. So I asked you whose decision this was for. And the point that I was trying to make was that this was a decision for the markets and for big money and a slap in the face for the consumer.
Well, I tried to tone that down because, as I say, I think the consumer benefits quite greatly from the rand strength. And so I wouldn't necessarily say I think it's overall it's for the good of the country and including the consumer.
Annabelle, is he the most hawkish governor we've ever had? I was listening to him there, and all I could hear was, I don't want to give you an excuse as to why inflation is over the target band. And the question came in, are you therefore now targeting the midpoint? And I think it was a fair question.
So yes, they do actually target the midpoint. They have always targeted the midpoint, and they will always target the midpoint.
Not the upper band, not the upper range.
No one targets the upper band. So basically the purpose of the upper and lower bands is firstly to create a band around the midpoint, 1.5%. But secondly, the purpose of the upper and lower bands is actually to encapsulate the range that inflation is within, and then ultimately to try and guide it down, not only to the 4.5%, but indeed even nearer to our trading partners. Because in the absence of us having an inflation rate that runs closer to our trading partners, we will persistently have a substantial depreciation in the currency. And initially, when inflation targeting was first brought out, the discussion was even about moving the target range down somewhat to 2 to 5% to try and move that midpoint down to 3%, which is the upper limit of a lot of our key trading partners' inflation rates. So they don't target 6%, and we must all be very aware of that. They target 4.5%. They've always done that. No, but they've always done that since 2001 when inflation targeting started. They've always targeted 4.5%, and an inflation forecast of 5.5% is an uncomfortable forecast because if something goes wrong, and the rand were to see a material depreciation or a huge spike in the oil price, you'd be over 6. You can't take an escape. No, but wait for me. You can't. No, but then there'd be no point of monetary policy targeting. If you're just going to use the escape clause, then throw out monetary policy because there's no point in it. So if you have a massive rise in the oil price and a huge depreciation in the currency, then you're so close to the upper limit of 6% anyway at 5.5%, you'll just be pushed over. And that is not astute monetary policy. That is not correct monetary policy and inflation targeting. So you need to rather target your 4.5% and allow a bit of a leeway around it, but not to the point where you could actually miss the target comprehensively, even for a sustained period. That would be bad for South Africa.
You need to answer my question.
I will.
Easy.
He is quite hawkish compared to the previous governor, or we won't call her governoress. Governoress, yes. But compared to Tito Mboweni, he is possibly not as hawkish as Tito Mboweni was. So Jill Marcus was at times less hawkish than Lesetja Kganyago, but she prevailed over an easier period. That's
what I was going to say, because Tito was also prevailing over a different time period. He is a governor who is increasing interest rates on an economy that's not growing.
But Tito Mboweni had the same problems, and he also had a situation where he actually increased interest rates by 2-3%. So those were massive increases, and interest rates were at a very high level already. You see, what you must understand is in South Africa, our interest rate is at a low level historically, and it is not even at a neutral level. It's actually stimulating the economy. So this is not a tightening of monetary policy. This is a move towards normalization. The neutral rate of inflation of interest rates in South Africa will be 2% above will actually be 2% above the inflation rate of 5.5%. That takes you to a repo rate of 7.5%. So we actually have very easy stimulatory monetary policy for our economy. And that is a well-known fact, in terms of both what's happening in the United States with the normalization of their interest rates, a move away from easy monetary policy to a neutral level, and in South Africa as well, moving to a neutral level would be a repo rate of around 7.5%.
Sure. Samke, I see you nodding.
I'm nodding, but I'm also I'm pained because these.
You're actually being convinced by the reasoning that she's provided, because it does make sense.
It does make sense scientifically, but we are moving to a normalization of one of the elements of the economy where we are sitting with other elements that are had historical highs. And at the risk of repeating myself, fuel prices are at historical highs. Historical VAT rate increase. Electricity prices. So when you look at those together, it has shifted the consumer to a worse position.
And I think that's a really important point that Samke makes, because you're actually taking pain now to make your future better, and recognizing the fact that without doubt the petrol price at an all-time high is clearly important. But then there's also a lot of volatility in the metrics as well. And if we have a R1.60 cut in the petrol price in December, it's going to be coming off its all-time high. And if the rand strengthens a lot now because of the hike in the interest rates and the oil price stays subdued, we could be looking at another petrol price cut in January. So it could actually aid the consumer.
Absolutely. That's the point I was going to make about what Lance was saying about actually the benefits coming
down the line and not immediately.
And I guess that's where the frustration comes in, because it seems that every time that we as the consumers say, fine, we'll bear this brunt with the hope of a future that is better, you find that then you have the 330 announcements that we're looking forward to stripping away those benefits. So the political environment tends to negate the benefits that these independent structures try and put in place to protect the consumer. And that's why I think you're seeing that increasing.
Now you're touching something else, because you seem to be suggesting that the different arms, the different policy platforms are not working together. Your fiscal, your political, your monetary, to an extent, not quite aligning and producing the outcomes that we want.
I mean, they shouldn't work together because they're independent.
They should work together, though, because the outcome is the same, right? The betterment for the people.
They have the same goal, but they have to remain independent in how they work. What I'm saying is you tend to find that the one arm will strip away the benefit that the other is trying to.
But if you have a stimulatory fiscal policy where they're very pro-poor, then that can actually counteract some of the negative impact of an interest rate hike on the poor.
Yeah, okay. I wanted to hear from Lance.
Yes, I mean, I agree with the sentiments. This is very, very important that we have an independent Reserve Bank, and they will do what's necessary in terms of their remit to protect the value of the rand. Well, that's not directly; it's really inflationally driven to protect the value of the rand, and they're living up to their remit. It's very impressive. It really, in the long term, it is very, very good for the future of South Africa. And in the context of the political change that we seem to be seeing in terms of a cleaning up of the past, those trends, if they continue in the right direction, this is a little blip, hopefully, of a small interest rate hike for the greater good. And as I say, if things carry on in this direction, the outlook actually for South Africa, you could argue, is the best that it's been in a long time.
It sounds to me like the Reserve Bank is almost single-handedly standing up and trying to pull back South Africa from the brink, if you like. And also, if you go back to my previous question around the issue of whether this decision was for the people or for the markets, and in particular the rating agencies, it does seem like with the rating agencies at least, the central bank has burnished its credentials.
Very, very much so. It is living up to its independence. It's reaffirming that. There has been some negativity about the nationalization of the Reserve Bank, which is really a storm in a teacup because it doesn't change its remit. And these are very important attributes and factors going into the 2019, which is going to be a fundamental year for South Africa. And yes, the Reserve Bank certainly is playing its part and living up to its role steadfastly in South Africa, and to the benefit of, ultimately, the benefit of everyone.
All right, Lance, thanks very much indeed. Our line is not the greatest, but thanks for participating this afternoon. Annabelle, listening to you, I was thinking what you are trying to say is that this decision was important for two reasons. Number one, to maintain to an extent, maintain the value of the rand, because if we didn't, the rand was going to go, not a free fall, but certainly there was going to be reversal of some of the gains that we have seen. Secondly, important in the context of the rating agencies and how important it is for us to be able to maintain at least investment grade with Moody's. Would you agree that this decision was for them? I take all the other points, by the way.
I think those 2 points that you've pulled out of what we chatted about earlier are very valid. But I think as well also, ultimately the Reserve Bank's actually focusing on inflation. And it literally is as simple as that. It is as simple as that. If the Reserve Bank feels that inflation could be close to the upper limit of the target or even on the other side of it, then their remit is to hike now. And it literally comes down to something that is that simple. We all put a lot of other factors into the pot when we talk about the Reserve Bank decision. We talk about politics. Even today, we talk about GDP. We're
still waiting for the president, by the way, to come and tell us if we're going to reshuffle or recall.
Yes. So we put so many other factors in the pot. But if you narrow your focus down to the one and only reason that they have for monetary policy, which is to keep inflation at 4.5% or certainly not above 6%, then I think understanding his decision today becomes a bit easier, given that there is the widespread view globally that the US could continue to hike interest rates next year, which means that then widespread globally people would expect that there could be negative emerging market sentiment and therefore further substantial weakness for global currencies. If those emerging markets, further substantial weakness for emerging market currencies, if those emerging markets don't look to hike their interest rates.
Absolutely. So Samke, we take pain now for later gain. Postpone.
With the consumer imploring the political structures to ensure that they don't do anything that will erode our future benefits.
Let's hope so. We hope that happens. Let's take a final look at the rand as we wrap up this discussion. We're still waiting for, by the way, for the president to come and tell us what he's doing and who he's going to be replacing those two ministers that have left cabinet. As you can see, the rand is very happy indeed with what has happened today. 1.1% we look from the gain. And it's the second day, by the way, under 14, so important from a technical perspective.
From a technical price point of view, because it actually means that we could get even more than R1.60 per litre cut in December if the rand continues to strengthen.